Texas's housing boom created an unstoppable frenzy. 540,000 newcomers, record prices soaring above $385,000, and a governor eager to claim credit for building a paradise. But in 2025, as buyers flooded out and housing contracts collapsed overnight, it wasn't just the market that cracked, it was the governor's composure. Now, with Winter Storm Marcus threatening to shatter what's left, hundreds of millions in home values and thousands of livelihoods are on the line. Why did Texas's hottest dream turn into a nightmare almost no one saw coming? The real unraveling starts right here. The Great Migration. Sun, wide open spaces, and a line of moving vans stretching across I-35. In 2021, Central Texas became the finish line for America's restless millions. Families, retirees, remote workers, and investors all chasing no state income tax and a promise of freedom. The numbers told the story. Texas's population surged by more than 380,000 that year, with Austin alone adding over 35,000 new residents. Houston and Dallas-Fort Worth, always magnets for corporate relocations, saw steady gains from California and New York, even as some longtime locals packed up for Tennessee or Colorado. For every U-Haul rolling in from San Francisco or Chicago, another home went off the market. Developers hustled to break ground on new subdivisions, but demand outpaced supply at every turn. Listings vanished within days. Bidding wars erupted over three-bedroom homes with hill country glimpses and cash offers started to crowd out first-time buyers. In some neighborhoods, the total number of homes for sale dropped by half in less than 12 months. By the end of 2021, the state's population topped 30 million, a record high. Austin's airport buzzed with new arrivals, while moving companies struggled to keep up with the flood of inbound shipments. Travis County schools added portable classrooms to accommodate the influx. Restaurants hired in droves, and even the smallest strip malls found themselves with full parking lots. This migration wasn't just about numbers. It reshaped the local economy. Real estate agents juggled dozens of clients at once. Contractors and tradespeople fielded months-long backlogs. Grocery stores expanded their hours, and traffic on I-35 slowed to a crawl during rush hour. For the first time in decades, Texas's housing demand felt limitless. Behind every closed sale, a new story began. Tech workers setting up home offices with hill country views, retirees finally trading state taxes for freedom, and investors betting that the boom would last. All of it fueled by the simple math of more people chasing fewer homes. The pressure built and prices started to climb, setting the stage for a market where expectations and anxieties would soon outpace even the wildest projections. Peak prices and Abbott's victory lap. By the close of 2024, the Texas housing market looked unstoppable. Median sale prices soared past $385,000, a 22% jump from the year before, outpacing wage growth, inflation, and even the most bullish forecasts from national analysts. In Austin's Westlake Hills, the average three-bedroom home, once a $450,000 starter home, now fetched over $850,000. Bidding wars erupted before listings even hit the MLS. Agents fielded calls from venture capital funds and overseas buyers wiring deposits sight unseen. Some neighborhoods posted wait lists longer than the amenities list. In Plano, a home that closed at $650,000 in 2022 resold for $1.1 million. Just 18 months later, the frenzy drew national headlines. Morning shows broadcast live from lakefront properties touting the region as the last great boomtown. Governor Abbott, never far from a ribbon cutting, presided over photo ops at new master plan communities, touting record job growth and home values as proof that Texas had cracked the code. Developers paid for billboard campaigns and sponsored influencer tours, promising buyers a slice of the Texas dream with every closing. Billboards along I-10 read, "Your Texas dream awaits, but not for long." On the ground, the numbers told a story of excess. Cash offers accounted for nearly half of all home sales in Travis County by December. Investors snapped up entire subdivisions, planning to flip houses before the landscaping was complete. In Frisco, more than 70% of new listings sold above asking with escalation clauses, pushing final prices higher by the week. Local buyers, locked out by soaring costs, watched as out-of-state money drove up values and shrank inventory to record lows. The press called it a gold rush. But for every headline about a record sale, there were whispers of risk. Debt-to-income ratios stretched thin, appraisals lagging behind contract prices, and a growing reliance on adjustable-rate loans to make deals pencil out. Still, the party rolled on. Open houses drew crowds that spilled into the street, and even the governor's social feeds brimmed with images of ceremonial shovels and congratulatory handshakes. For a moment, it felt like the boom would never end. The insurance exodus. 8 property insurance carriers failed or withdrew from Texas between 2022 and 25. Each exit announced with little warning, each collapse sending shockwaves through the market. State Farm, once one of the largest in the state, withdrew from large swaths of North Texas in August 2025, just weeks before tornado season's peak. Their departure left more than 45,000 policyholders scrambling for alternatives, many forced to accept bare-bones coverage or risk going uninsured entirely. By the time the dust settled, more than 800,000 homeowners statewide had lost their private coverage in less than 3 years. The dominoes fell quickly. After every carrier exit, lenders tightened their rules. Mortgage approvals stalled if buyers couldn't produce a valid policy. Home closings froze mid-escrow, with some buyers losing earnest money as high as $25,000 when deals unraveled. Agents and attorneys fielded panic calls from clients suddenly uninsurable, forced to shop a shrinking list of specialty brokers with even stricter requirements. In Houston's flood-prone neighborhoods and Dallas's Hale Alley, entire subdivisions found themselves blacklisted, unable to secure coverage at any price. Insurers blame mounting losses from hailstorms, winter freezes and flooding, the rising costs of reinsurance, and a wave of lawsuits over roof claims and water damage. Each crisis year, the state's insurance commissioner held emergency hearings, but the exodus continued. Carriers that stayed demanded higher deductibles, windstorm and hail exclusions, and stricter inspection rules. For HOA boards, the annual renewal became a guessing game. Would they get an offer at all? And if so, at what cost? The private market's retreat forced thousands into the Texas Fair Plan, the state's high-risk pool meant for emergencies, not the day-to-day business of insuring the bulk of the state's homes. By mid-2025, the FAIR Plan covered more than 1.5 million properties, nearly 1 in 7 homes statewide. That pool of risk grew with every carrier failure, stretching the system and raising the specter of surcharges on every policyholder if a major disaster hit. The rules had changed overnight. Where insurance had once been a formality at closing, it was now the single biggest obstacle to buying or selling a home in Texas. Buyers and sellers alike faced a new reality. Coverage wasn't just expensive, it was vanishing. Premium shock. Insurance premiums in Texas are rewriting the rules of homeownership. The average annual cost for a homeowner's policy in Harris County now stands at $5,847, more than double what buyers paid just 3 years ago and nearly 3 times the national average. For many, that's another mortgage paid to insurers with no ceiling in sight. Dallas County isn't far behind. Homeowners there face yearly bills of $5,620, with some HOAs passing special assessments just to keep their master policies active. These aren't optional expenses. Lenders require proof of coverage before closing, and any lapse means deals fall apart, sometimes days before move-in. The private insurance market's retreat has forced a mass migration to the Texas Fair Plan, the high-risk pool originally designed for emergencies only. By mid-2025, the Fair Plan covered over 1.5 million homes, nearly 1 in 7 across Texas. That pool grows with every carrier exit, stretching resources and raising the risk that a single major disaster could trigger surcharges for every policyholder in the state, not just those in the Fair Plan. For buyers, the math is brutal. Premiums now swallow a larger share of the monthly payment than property taxes in many neighborhoods. HOAs already squeezed by new infrastructure mandates pass rising insurance costs directly to residents. Special assessments of $3,000, $8,000 or more have become routine, with some owners forced to sell rather than pay. The pain isn't limited to the closing table. Each renewal season brings fresh sticker shock. And every severe weather forecast sends rates higher. Some neighborhoods, especially older ones in flood zones or hail corridors, can't find coverage at any price. Their homes sit unsold even as inventory piles up across the major metros. Buyers who once dreamed of a second home or investment property now face premiums that erase any hope of profit. For families stretching to afford a starter home, a single insurance quote can end the search for good. The pressure lands hardest on those with the fewest options. First-time buyers, retirees on fixed incomes, and anyone caught between a pending sale and a lapsed policy. In Texas, the cost of peace of mind has never been higher, and for many it's out of reach entirely. Mortgage math gone wrong. Mortgage math has turned brutal across Texas. A 30-year fixed loan on a median-priced home now runs over $2,400 a month, double what buyers faced just 3 years ago. That extra $1,200 isn't a rounding error. It's the difference between qualifying for a starter home and getting locked out entirely. For first-time buyers, the dream of home ownership has shifted from difficult to near impossible. In Austin, a young couple earning the county's median household income now spends more than half their take-home pay just to cover principal and interest before property taxes, insurance, or HOA fees even enter the equation. Rates above 7% have become the new normal. Lenders require higher down payments, stricter debt-to-income ratios, and airtight documentation. Buyers who stretched for a pre-approval in 2022 are now told their budget buys far less. Many have watched their purchasing power evaporate with every Fed rate hike, each new insurance premium, and every special assessment tacked on to monthly costs. For a home once listed at $385,000, a buyer putting 20% down faces a monthly payment nearly $900 higher than in 2021, erasing the advantage of lower prices and pushing families to the sidelines. The squeeze is everywhere. Teachers, nurses, and small business owners, once the backbone of the local market, now priced out of neighborhoods they've called home for years. Some turn to adjustable rate mortgages, hoping for future relief, but most simply wait, rent, or look elsewhere. Agents report open houses filled with hopeful faces, but fewer offers. Pre-approval letters expire before buyers can find a home they can afford. The gap between what people earn and what lenders require grows wider by the month, leaving a generation of would-be homeowners in limbo. Investors, too, have pulled back. Rental yields are shrinking as carrying costs climb. The calculus is simple. If the rent can't cover the mortgage, taxes, and insurance, the deal doesn't pencil out. Small landlords hesitate to bid, and institutional buyers shift capital to less volatile markets. For every cash buyer, there are dozens more watching from the sidelines, waiting for rates or prices to fall. The result is a market full of listings, but short on qualified, willing buyers. The affordability crisis isn't abstract. It's a daily reality for thousands across Texas, and it's rewriting the rules of who gets to call this place home. Inventory crisis. Nearly 52,000 homes now sit unsold across Houston, Dallas-Fort Worth, Austin, and San Antonio, a 73% surge from last year. The math is simple and brutal. 2 months ago, sellers could expect a signed contract within 2 weeks. Now the average listing lingers for 75 days, with some neighborhoods showing row after row of empty driveways. The market is flooded, but buyers are scarce and skittish. Each new listing is another plea for attention in a sea of price cuts and incentives. For agents, the mood has shifted from frantic optimism to quiet anxiety. Open houses draw more lookers than bidders, and every conversation turns to insurance quotes and property tax bills. Pending deals fall apart at the last minute. Sometimes over a missing windstorm certificate, sometimes because a lender refuses to fund a loan on a property flagged for foundation issues. In Plano, more than 1 in 4 contracts was canceled in July, the highest rate in the state. Buyers who stretch to make an offer face a gauntlet of hurdles. Earnest money deposits, once a safe bet, now vanish overnight if a deal collapses. One couple hoping to buy their first home in Round Rock lost $19,000 when their mortgage approval was yanked after the neighborhood's HOA insurance policy lapsed. Their story is hardly unique. Social media is filled with posts from would-be owners stunned by the speed at which their dreams evaporated. Sellers, too, are feeling the squeeze. Those who bought at the peak are forced to slash prices, offer to cover closing costs, or throw in a year's worth of HOA dues just to keep buyers at the table. For every successful closing, there are 3 more listings that quietly expire. The owner's left waiting for a call that never comes. The glut has changed the rules for everyone. Investors once eager to snap up rental properties now demand deep discounts or walk away entirely. HOA boards, desperate to maintain property values, debate whether to allow short-term rentals or relax deed restrictions. Anything to fill the empty homes. The liquidity that fueled Texas's boom has dried up, replaced by a weary standoff between buyers and sellers. In this new reality, the only certainty is that inventory keeps climbing, and every failed deal leaves another story of loss in its wake. Winter Storm Marcus, the breaking point. February 3rd, 2025, the National Weather Service's 5 a.m. advisory flashes across every agent's phone. Marcus, an unprecedented winter storm system, with ice accumulations expected to exceed 2 inches. The storm's path doesn't just graze Dallas-Fort Worth, it engulfs the entire I-35 corridor from Oklahoma to San Antonio. Within an hour, inboxes fill with subject lines, contract on hold, buyer requesting extension, earnest money release needed. By mid-morning, the calls start coming in waves. Jennifer Martinez, a top producer in Plano, watches as her pending sales dashboard bleeds red. 28 deals under contract at sunrise. By noon, more than half are canceled or stalled. Some buyers cite infrastructure uncertainty after memories of the 2021 freeze. Others invoke the weather clause buried deep in every standard contract. One couple set to close on a Highland Park estate walks away from a $22,000 deposit rather than risk an uninsured loss. Their lender, like dozens of others, freezes all new approvals until the storm's impact clears. Developers feel the sting instantly. Toll Brothers, with 6 communities in active pre-sale, reports a 55% wipeout in new contracts. Entire phases go dark in the sales log before lunch. Title companies pause earnest money releases, citing force majeure. Attorneys advise clients to hold off on wire transfers. Agents huddle in office break rooms, phones pressed to ears, scripts ready for every variety of panic. The dominoes keep falling. HOA boards scramble to update insurance certificates, but carriers refuse to bind new policies with a major storm in the forecast. Property managers send out emergency notices, pool facilities locked down, open houses suspended, roof inspections moved up. In Westlake, a master plan community pulls all active listings offline, hoping to avoid a flood of price cuts if the worst happens. By late afternoon, the MLS feed reads like a casualty report. In high-risk zip codes north of Highway 114, cancellation rates spiked to over 60%, 12 times the usual weekday churn. Older neighborhoods already struggling with insurance gaps and deferred maintenance see buyers vanish almost overnight. For every deal that falls apart, 3 more are pushed into limbo. Buyers and sellers alike waiting for the next NWS update. The market doesn't freeze so much as sees every moving part locked by fear of what the next advisory might bring. The operational freeze. By the time Marcus's leading edge pushed temperatures below freezing along the Red River, the Texas housing market was already in lockdown. Every agent's phone lit up with the same message: showings pause until further notice. MLS feeds stopped updating new listings north of Highway 380. Title companies, citing weather clauses buried deep in standard contracts, froze earnest money releases on more than 1,500 pending deals. In master plan communities from the Woodlands to South Lake, HOA managers posted emergency notices. Amenity centers closed and winterized. Model homes locked. Open houses canceled indefinitely. The operational freeze swept through every corner of the market. Lenders issued blanket holds on new approvals, refusing to fund closings in any zip code flagged for winter storm risk. Attorneys reviewed contracts line by line, searching for any language that could let buyers walk away without penalty. The weather clause, once an afterthought, became a lifeline. Dozens of buyers invoked it in a single morning, citing the threat of frozen pipes and power failures. If Marcus tracks south, some sellers, desperate to salvage deals, offered to cover extra insurance or extend closing dates, but most negotiations ended with a single email: contract terminated per force majeure. For agents, the mood in the office shifted from nervous to numb. Jennifer Martinez, who started the day with 16 active contracts, watched her pipeline shrink by half before noon. One buyer, a relocating executive from California, forfeited a $15,000 deposit rather than risk closing on a home with questionable winterization. Another, a young family from Katy, spent hours on hold with their lender, only to be told that all new loans were suspended until the storm passed. The sense of paralysis was total. Every conversation circled back to the same question: when would the market move again? Developers, too, found themselves trapped. D.R. Horton's sales office, once buzzing with activity, sat empty as entire phases of contracts were voided in the span of hours. Legal teams scrambled to draft new addenda, hoping to reassure jittery buyers. But the damage was done. By the end of the day, more than 55% of new contracts in some communities were either canceled or indefinitely delayed. For every agent pacing the hallways, there were 3 more refreshing the MLS, hoping for a sign that the freeze would fall. The storm's impact reached beyond North Texas. South in Austin and San Antonio, showings were put on hold, not because of ice or cold, but because insurers refused to bind new policies anywhere in the storm's projected path. The operational standstill wasn't just a regional story. It was a statewide shutdown, triggered by a single advisory from the National Weather Service and enforced by the fine print in every real estate contract. In those hours, the Texas housing market wasn't just slow, it was silent. Abbott's political crisis. Governor Abbott's inbox pinged every hour on the hour. Subject lines stacked with urgent requests, directives, and replies from a dozen state agencies. As Winter Storm Marcus's forecast locked onto North Texas, the governor's office pushed for immediate action, pressing the Texas Department of Insurance to fast-track emergency coverage and guarantee temporary policies for any stalled closing. County officials, especially in Harris and Dallas counties, bristled at the pace. Their building departments demanded strict code compliance before green-lighting any new permits, pointing to the backlog of foundation reports still unfinished since the 2021 freeze. In a single morning, more than 300 emails traded between Austin and county offices, each one escalating the urgency. Each one met with a new set of conditions or clarifications. On the ground, the result was gridlock. State inspectors arrived at subdivisions with marching orders to clear homes for occupancy, while county engineers insisted on full documentation before signing off. Permit counters filled with HOA managers pleading for emergency approvals, some waving letters from the governor's staff, others clutching new insurance quotes that expired by sundown. In Collin County, a community president described the scene as a standoff with clipboards, state teams urging speed, county officials warning that any shortcut could invite the next disaster. Developers caught in the crossfire blasted out group texts to lobbyists and state representatives demanding a single set of rules. The Texas Association of Realtors, flush with fresh campaign donations, called for a moratorium on new infrastructure mandates until the storm season ended. Meanwhile, the state's Emergency Operations Center sent out near-daily bulletins reminding local governments that restoring market confidence depended on visible, decisive action. But the divide only deepened. Harris County's permitting office, short-staffed and wary of liability, slowed approvals for older neighborhoods and floodplains. Dallas County's code enforcement flagged dozens of subdivisions for incomplete drainage studies or expired elevator certificates in mid-rise complexes. State officials countered with legal memos, citing emergency powers and the need to restore liquidity before the next insurance renewal cycle. The volume of directives, appeals, and counterclaims ballooned. Each side convinced the other was risking either public safety or economic collapse. By the end of the first week, the market's verdict was clear. Inventory kept climbing. Buyers stayed frozen, and the state-county feud played out in real time. One order, one permit, one stalled closing at a time. The spillover effect. Round Rock stands as the cautionary tale. Home values down nearly 18% in 3 years. Active listings up more than 450%, and sellers cutting prices just to get a single showing. CoreLogic now ranks Round Rock, Georgetown, New Braunfels, and McKinney among the highest risk markets in the country for further price declines. In Round Rock, the surge in inventory has overwhelmed the market. What was once a seller's playground now feels like a liquidation sale, with agents reporting entire subdivisions sitting idle for months. It isn't just local owners feeling the pain. Out-of-state investors, once eager to snap up Texas homes, are shifting their attention elsewhere. Tennessee and North Carolina, markets perceived as safer from extreme weather and insurance chaos, have seen a 28% jump in out-of-state offers since July. MLS data shows a clear migration of capital, with buyers who once fought for Austin listings now bidding on homes in Nashville or Charlotte. The ripple effect is undeniable. For every Texas listing that sits, another market gains momentum. Economists tracking the fallout warn that the downturn isn't evenly spread. Houston and Fort Worth, buoyed by energy sector stability and corporate relocations, show signs of resilience. But for most of Texas, especially aging suburbs and master plan communities built in flood zones, the forecast is bleak. One real estate professor at the University of Texas put it bluntly: suburban properties in high-risk weather zones are going to take the longest to recover here. They are the ones that are lagging the most in Central Texas. For buyers, the message is clear. The days of easy money and endless appreciation are over, at least for now. Experts advise demanding up-to-date documentation on foundation integrity, drainage systems, and insurance coverage before making an offer. In high-risk markets, cash is king and patience is essential. For those locked into older neighborhoods with deferred maintenance, the best move may be to hold, renovate, or rent until the dust settles. If you're considering a move, look closely at the numbers, not just the square footage. The market's verdict is in. Risk is back on the table, and caution is worth its weight in equity. The final tally. In 2021, over 540,000 people moved to Texas, fueling a housing boom that pushed median prices above $385,000 by late 2024. But just months later, the market saw a 73% surge in unsold inventory and a 14% drop in pending sales, with average mortgage rates topping 7%. 8 major insurance carriers exited the state, forcing 1.5 million policies onto the FAIR plan and driving Harris County premiums above $5,800. When Winter Storm Marcus was forecasted on February 3, 2025, more than half of housing contracts collapsed in a single week. Internal state emails reveal the governor's office issuing hourly directives amid political standoffs with local officials. Yet many documents detailing infrastructure safety and insurance risks remain undisclosed. Today, Round Rock faces an 18% price decline, while out-of-state buyers shift their attention elsewhere. What remains unclear is how resilient the region's housing market will be if another freeze hits or insurance options shrink further. The evidence shows that Texas's housing crisis is both a warning and a challenge.